Good morning, everybody. It is Thursday, March 6th, and we are going to start our prep today for the ES. First, just a question. Were you ready for the 100-point move yesterday and a pocket on the backs of the billions in the market that were buying and then where they would sell? If not, we're going to dive into reviewing yesterday to begin. First, a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. Now, yesterday, when we started our prep, we had laid out that we had a $2 billion bid from our systematics that was going to stop right at 57.43. And we had a $4 billion bid from our market makers right here at that 57.60 area. And on the upside, we knew that this 50 to 60 area, with really at 65, is where we were going to see a big transition as we would go from a $2 to $3 billion buy to a $2 billion sell to a $8 billion total sell right here. And that is where we hit for high of day. So if you're following the flows in the market, you can trade with the $6 billion that's buying at the low and sell when that $8 billion is selling at the highs. And that is the easiest move to catch. And we laid out for our subscribers intraday that this 58.31 was going to be the key. We posted this at 12:54 for everybody to see that this was going to be the key area. And again, we monitor these as they change throughout the day. And we saw a 30-point sell. And then once we reclaimed that level as it had dropped down to 58.09 at the point, then we had another 50-point rally right up to that area again where we had that $8 billion in selling. So if you are just trading a simple moving average or randomly jumping in the markets without following these billions of dollars, unless you are an extremely well capitalized individual that is moving these markets, then you are playing the game at a disadvantage and it's time to level up. And so if we want to look at our plan for today, we are insured and just slightly overinsured for NFP tomorrow. So we'll likely see that get pushed up a little higher into our red zone. What we're going to watch for next week is to see JOLT, CPI, and PPI. So Tuesday, Wednesday, Thursday, look for those to get bid on as well for that insurance. And one thing we've learned this week is in this higher volatility environment, as we're still waiting on the final capitulation of traders, is this is likely going to come a little bit on Monday, as we saw a large increase this week in terms of for ADP and Jolt for ADP and NFP. It started on Monday. So for next week for Jolt, PPI, and CPI, we're going to look for that to start a little earlier, but probably not before the weekend because nobody wants to pay for that extra insurance for 2 days when the market is closed. Now, to get us prepared for our flows today, we have our line in the sand, minor line in the sand at 58.43, our major line in the sand up at 59.56. That tells us again, when we're below that, we look for cleaner price action, a little more edge to those shorts, and wider ranges. Again, higher volatility, we get these wider ranges, and that's what shakes people out. So you need to be a little more precise on where you want to get in and position yourself in these markets. From our systematics, we have a small bid of about $3 billion, and that turns into basically a $2 billion, almost $3 billion sell at 58.10. So staying underneath 58.10, then we have to really watch our tails where we have $9 billion in selling and then almost $19 billion in selling if we break yesterday's low. That would be a very large sell coming in the market. And then at that point, our market makers would be under their last major bid in the market as well, and we would see a cascade much lower. Don't forget to watch those election levels on the cash index, as that is going to be key moving forward. So from our market maker standpoint, we have a little bit more interaction today than we've had. And so we're looking at 57.60, 57.80, and 58.10 as three areas where we've got about $3.5 to $5 billion sitting in the market. And that is going to keep us contained. Look for a pinball there. Getting over that, we will bring our systematics back in as buyers, and that should help push us back up to that 58.64. And that would be where we get the highest amount of buying from our systematics. Staying under that, though, this 58, 10, 12 area is going to be key now today. That is right around where our mid-level pivot is. So in terms of our levels, we are looking at rotational from 57.60 to 58.61. So again, right where we have that first offer, kind of major resistance from our market makers. And that 57.60 again is right where we have that final bid. And, really where we get into that $10 billion in selling, which losing that and bringing in an extra 10 billion will really push down a lot of the equities in the market, like Apple and Nvidia. And that is an area we would expect defense to come in unless the market makers are going to shake everybody out. If we do break that, we're looking for 57.03 and then 56.86 or 56.68. Sorry. And then if we get over our rotational high, we are looking for 59.37 and 59.64, right where we would get back to neutralized at our line in the sand ahead of NFP. So we will follow our levels and we will follow the flows. If you are interested in learning how to do this on your own, check out our website for our Discord offerings and course offerings. New courses are starting soon. And just remember to control your risk. That's the most important thing. That's the number one thing that we can control. So be sure to pay very close attention where you're getting in this higher volatility environment. Have a great day, everybody, and stay safe trading out there.